Welcome to TradeTheNBI.com. This is John. This report is for the 18th. Well, we pushed to new highs, but not sustainable. Of course, you had the beautiful retail sales number come out, and miraculously, it was super fantastic. Unless you actually read it, which you realize they made the largest seasonal adjustment ever. You remove the seasonal adjustment, retail sales were actually down 7%, but that's not exactly what they reported because all they did was make an adjustment, and miraculously, it was super duper. And this is what we've been seeing for the last several years now of this print the fake number, looks good, and then revise it later. We even saw the FBI just did this with crime numbers. Turns out they were, talking about how wonderful crime had been reduced over, the Biden-Harris administration, until the FBI just quietly released that, no, we actually missed a few thousand murders and, all the other stuff. And so they revised it and changed it to where now we know that no, crime actually has gone up. So this is a problem because the reliance on material fact that is not fact is just made up. It really poses a problem when it comes to understanding what's really going on dynamically. And the market is supposed to be about everyone being aware of the information that's available. And that's not so much when some people know that it's not actually accurate. Because if they're reporting the broad headline numbers, that's what people see. But those that look at it realize, okay, things are not quite what they're describing. From a market standpoint, you can see a drop off of magenta below the 33 level. At the same time, completely collapsing short interest. But this also becomes difficult. It's harder for bulls to push the market up without a significant short interest to help drive that purchasing. Everyone complains about shorts, but at the end of the day, they're the ones that help drive markets to new highs. From an NQ standpoint, it was already weaker, but likewise, similar lack of interest from a short standpoint. And at this particular stage, you've got a kind of a conversion towards that Trump trade as those areas where they believe that he will have the greatest impact seem to be making a move at this particular stage. And people betting with their money is usually an indication of where they think things are headed from a treasury standpoint. Of course, yield continues to rise as it drops here on TLT. No way around it. The market is going to be forced to have to give higher yields despite what the Fed does, simply because why else would you be interested in the treasury? I mean, it makes absolutely no sense. From an oil standpoint, we're still modest, but above that 70 level, it's problematic. And again, this gets back to world tensions and whether or not we have any, direct conflict escalation with the Israeli attack on Iran or vice versa. Those things are they're the known unknowns, and you can't worry about it until those things actually happen, because otherwise it's just speculation. If you see a broad move that it could be a precursor that some people know something's about to happen, that's the best you can hope for. I mean, we're going to see it as early as possible. And from a euro standpoint, the euro ECB recognizing pretty much that, they had a thing that was working and they pretty much have turned it into a mess. Lacks growth, the capability of growth, just because of the restrictions and things that they've placed on it themselves. And you get what you get and you don't get upset. But no question about this one. Gold continuing to make new highs, and surprising that it's even below 3,000 or greater at this particular stage, but it'll get there. So it's just a matter of waiting for that to happen. The constraints that can be applied to it are falling apart by the day, because the demand from everyone who wants to hold on to something outside of fiat currencies is just growing. From all over, from central banks on down. Why would you be interested in buying a treasury to hold your money? You'd rather hold on to something that isn't going to be losing a significant portion of its value every day. And people can see that just from when they have to go to the grocery store. From a Bitcoin standpoint, also continuing its escalation and probably the precursor to its move into triple digits. ETH likewise heading probably more towards that 5,000 range than under 2. which is interesting given that you're only at 26 at this particular stage, and we actually went to 21. Um, Doubtful that you'll see that, barring any kind of malfeasance issue. There's always that when it comes to the crypto side of things. From 50K, we had the huge spike up way. Wow, what was that reading? That was pretty enormous. My goggles on, but there's like a 50 plus. That's pretty extreme from a magenta reading standpoint. And that was enough to, spike things for a little bit. But then as the breakdown comes, we got the fill back all the way to the 50% without really that much of a short interest increase. It didn't really start to really make a spike move until just a little bit towards the end of the day. And that's clearly the reading that we're in right now. But you got magenta back above yellow at this particular stage. That's what's holding it. Very simple. Above the 50% can be on the long side, but below that definitely is a short configuration. Slight dip here of the extreme below the red line. So there's, going to be some trepidation. This is getting into that election play as we build towards the finale of things. But again, underlying economy still has a relevance to it. No matter what they seem to be doing at this particular stage, you're just not seeing a whole lot of positive growth aspects. In fact, more consolidation than not, and that's just something that's going to play out until the election, and then from there, a whole new set of trades will take place, and we'll have a whole shift of where things are going to go. From an intraday standpoint, you can see it was pretty much selling early on, had to eliminate, call options, and then when the puts got too heavy, shifted back up the other way. That's just how that goes. And then we finally ended up right back down at the bottom of the situation, and we're holding fairly flat here in the post market. There's a slight pushback to move to the median range. And so, again, all this is very healthy back and forth for now. We may start to see even more dramatic move, though, as we get closer to the election, particularly if things become more solidified. You'll get people committing to one side or the other in a more dramatic way, and I think that will make things pretty clear. So this particular stage, we just continue to follow the readings. As always, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.